Good morning, everybody. Welcome to The Profitable Salon Owner, where Catherine and I get salon owners profitable fast. And hopefully you can hear us. Maybe you could send us a little quick hello so that we know that
you can hear us.
Yeah, absolutely. First up on the agenda this morning, though, is that we have to thanks, Ashley.
Oh, thanks
you. Sarah.
That's great.
Well, the first thing we want to do this morning, of course, is thank our sponsors, Vagaro Salon Software, for having us as their business resource. We are always so thrilled to work with them because what an amazing and innovative company.
Absolutely. And what we're going to talk about today is knowing your numbers, and they definitely make that easy for you.
Exactly. And one of the things that I really love about Vagaro too is even actually on one of our blogs that they posted this morning, it's about, being disruptors in the industry. And I really believe that is Vagaro's role is that they are always coming up with innovative ideas to help us move our business forward with unique ideas. So if you are not using your system to its full advantage, please check it out and see all the different things that you can do with this system.
Absolutely. All right. And here we are. We thought we would show you a different picture today. This is actually where we sit. And we are actually doing one of the webinars. We had a friend in one day and she snapped this pic for us. And look, it looks like I'm praying.
Praying for success.
I'm praying for you guys. So it just gives you an idea of where we are and what we're doing and how we're doing it. So
yeah, now you know. Yeah, I think maybe you should send us pics of yourselves.
No kidding. So we get to know you. I'm going to apologize for my voice. Even last month my voice wasn't really great, and it's still the same, unfortunately.
I think she sounds really sexy. So does her husband.
It's been 6 weeks. I'm done. Anyway, on we go. So the topic today is, do you know your numbers? Income versus expenses. And Aileen and I are all about understanding and knowing your numbers. It is so absolutely critical. It doesn't matter if you are an independent, if you have a small salon or a large salon. Knowing your numbers is the difference between
success and non-success.
Yeah, really. I mean, if you don't know your numbers, I always say you're flying by the seat of your pants.
Exactly. And unfortunately, it is really true in our industry. Kath and I have talked to, well, probably over the years, probably now thousands of salons.
Yeah.
And this is the one thing that we find is really lacking for most of us is that numbers aren't our strong point. So we tend to sort of let them slide and we don't really pay enough attention to them. However, what we want to do today is really kind of make it fairly simple for you so that you can see how easy it is to track the basics, just the basics even.
Yeah, and really that's what we all must do. It's not even need, it's a must. We must know our numbers in order to move forward successfully. Aileen and I, as she said, we've talked and been around thousands of salons over the years. And honestly, I think it's the one thing that still drives me crazy is so many times we'll say, so what did you do last month?
Yeah. What are your numbers?
Oh, well, I don't know. I'll have to ask my bookkeeper or I'll have to go look at you should know that should be right at the tip of your tongue to know what it was you did last month. You need to know every day what you need to do on a daily basis to be successful. And, Aileen has been great at this over the years. I used to get into her car, and as a sales consultant, she was on the road. So her car was like her office.
Always.
And she had numbers posted on her dash because she needed to measure every day where you landed.
Exactly. Because if I'm not hitting my numbers, then I'm not meeting my expenses that I need to be able to do what I do, right? So I have to know exactly what it is that I'm bringing in order to know how much I'm going to be putting out, right? And it's actually really easy. We're going to make it simple for you today.
And Tashara, Hi, Tashara. She said she's so glad she's in on this call today because she's a new salon owner and this is much needed. I can't tell you how this can impact you. It's great to be creative, and I know because, you know, I've been a salon owner most of my life. It's great to be creative, but let me tell you, if you are creative and you don't understand your numbers, your success is going to be much less than if you are creative but have an understanding of your numbers.
I find it really challenging in so many posts that we're seeing on social media from in our industry about the struggles. You know, we hear stories about chair renters, individual stylists, salon owners who are struggling to make a decent living in this business. And actually, this is a very, very exciting business where you can actually earn yourself a really decent living. But if you don't know what your numbers are or how you're going to get there, how are you going to drive yourself there? You cannot do this job for free and expect to earn a living.
No, you can't. So hopefully by the end of this today, if you feel like you're flying by the seat of your pants or you're flying blind, hopefully we can take the blinkers off and make you at least understand what it is that you need to do in order to move forward productively.
You got it. And have fun.
And have fun, yeah. Because it's never fun.
Yeah. Here's somebody who is not enjoying themselves.
No, not at all. And I mean, if you feel some days that this is you, then you're not alone. You're with a lot of people. Numbers, you know, are definitely not my strong point. And I will tell you that, you know, I, over the years, have I've always worked with an accountant and a bookkeeper. Because I felt that was their strength. I don't expect them to be able to cut hair, and I can't really do what they do. So I've always, you know, done that, but I myself have had to teach myself an understanding of the basic numbers.
And one of the most important things is that you know every day what you've got.
Absolutely. Even like, I've always done this, always, right from the beginning, or you know, close to the beginning when I kind of got my head turned around, that it wasn't just about the creative. It was like you had to have a knowledge of your numbers. Every day, the first thing I do when I go into my space is I know what was done the day before. I know what I need to do that day because I know by the end of the month, I need to have a certain amount of money. You know, there's so many of us that have too much month,
not enough money
at the end of their money.
Yeah.
So basically, you know, you still got a week and a half to go, but you're not making the money.
Exactly. So, you know, as we go through today, we really want you to really start thinking about what you need in a month to make it through. Because really, when, like, for example, here we are still in the first half of April. The money isn't really yours until you've collected in your bank all your financial commitments to the end of the month, right?
Sorry, I just have, Jean is having trouble connecting. You have to maybe go out and get back in again, Jean. And Scott, a couple of questions, so let's just take care of them. Having trouble reporting out daily salon totals. It only produces a combined list of transactions, not divided by days. This requires me to then do so manually. Scott, that is definitely something that you need to talk to Alexa from Vagaro.
Yeah, or one of their support people.
Or one of their support people about, but that's a really good point. And, you know, you can do it manually, but it should be simpler. You should be able to do it on your software.
And Natalie, do we have a spreadsheet? Not really, because, well, you'll sort of see as we go along and what you can use. But yeah. Spreadsheets are so individual that we don't have anything sort of generic. But I think when you see some of the later slides, what you can do, it's pretty simple. Yeah. with a really basic accounting sheet.
Yeah, and you can actually go online and just Google and you can get a spreadsheet, and then you can type in exactly the expenses and everything that you particularly have, and then it makes it easy.
Yeah.
So, Ira, you don't have voice. Can I use my phone for voice? Yes, I believe you can.
Yes. So you might have to go out and come in again.
Yeah. Okay. So
let's get started right away.
Let's get started.
I love Sample Salon. They do really well, don't they?
Yes, Sample Salon.
Yes. And here's the thing is, when we're talking about, this is what we call a revenue and expenses or profit and loss statement. And this is a really basic statement that you need to understand for our business. You need to see your income and your expenses, and we're going to separate them. Now, according to accounting principles, of course, we always want to match the periods. So whatever earnings that you have in the month of April, you want to match the expenses to the same period. Okay? And that's really, really simple.
Yeah. And income comes from two sources, really.
For
service sales and retail sales.
You got it.
So,
and we like to separate them because it drives us in a different way. Each of them sort of drive us in a different way.
Yeah.
So let's take a look at this one, right? So for example, under sales, we've got services. In the current period, they've done $2,800 in services, and products are $200. The next figure shows the percentages. So the percentage of the total revenues of $3,000, 93% goes to the services and 6% goes to the products.
And what should we always, what should be that split, Aileen?
Well, really, you guys, ideally, we're looking at 25%.
Yeah.
25%.
So it should be 75 from services, 25 from retail.
You got it. And really what our industry is doing is so pathetic, you guys. The industry average is about 9%. Yikes. Yes. Because you think about what else you can be doing. I mean, like, for example, this little salon here, if they've got $2,800 in services, imagine if they've got a quarter of that, which is about $700. Like that's another $500 a month in revenues.
And the reason we like that split, really, when you think about it, wages take a bigger chunk of our expenses than retail. We can actually make more money with retail than we can with services.
Right. And so the retail, if we can really drive some of our retail sales, it really helps us meet these monthly expenses. If you look over at the year to date, what we do is we start to acquire as the months go on so that you add it up. So for the month of April, you're going to add that to January, February, March, and you can see where you're running for the year. Same with services, etc. And again, you're using those percentages. And then, of course, down below, we've got our expenses. We love expenses.
We do love expenses.
Yeah.
Donna was saying, how do you figure? And Scott was saying, and Scott answered for us, thank you. Because you don't have to pay wages for retail sales, only services. And really, when you think about it, we always say that retail products sitting on the shelf is a silent salesperson.
You got it.
And I honestly, because I've been a salon owner forever, I would rather do more retail sales because then I don't have to deal with more staff. And really, it's a silent salesperson. And if you do really well with retail, it drives your business. My goal has always been to pay my rent with my retail sales, through my retail sales.
Because I mean, what an accomplishment is that? And from a service provider's point of view, retail sales are not necessarily about commission. Retail sales are really about retention. Because if your clients are using your products at home, the chances are that they're a loyal client, and that means that you've got retention with them and they're coming back over and over again. So we do see a direct correlation between retail sales and service sales in the point of view of retention.
Absolutely. So, and that's taking us off on another topic. However, so
we'll be back there in another month.
So we'll talk about expenses. So, you need a list of everything that is going out every month. So whatever that looks like to you, maintenance, we always have maintenance, office, rent, supplies, and supplies are the biggie. That's really, that's really one that we have to look at and we were able to control, and we'll talk about that a little later. Utilities, wages, again, is one of the the ones that takes a big bite out of what we're making.
Yeah, like in this example here, you know, this is an older example. It's actually from 2003, but you can still see that it's almost, the wages are almost 50% of the total or the revenues, right, or the service revenue. So you can see that wages are really high. Depreciation, I think, is something that you really need to think about, because depreciation is an accountant's way of valuing the assets as they're being used. So when you've got, for example, this beautiful equipment in your salon, and you've just paid, you know, $10,000 for all these fantastic dryers that are hanging from the ceiling, you need to be able to assess a cost to the use of that equipment, and that's depreciation. So that's really all that depreciation is. Scott,
how do we bear in mind non-monthly expenses that instead come up sporadically?
Well, that actually takes us into the next slide.
It does.
And we're always looking at fixed expenses and variable expenses. And let's talk a little bit about the difference, because I think this will answer your question, Scott. Fixed expenses, of course, are
rent. Usually is a fixed expense.
So what they mean by fixed expense is that those expenses that are the same month after month after month.
Yeah.
Right? So they would be things like your rent. Sometimes it's your accounting or your bookkeeping is a specific amount of money. Your insurance, perhaps. There's certain things that look at that are always the same every single month. So we call those the fixed expenses. And those are the easy ones to figure out.
Yeah.
Right? Your variable expenses are the ones that vary.
They change month to month to month. Supplies, for instance.
Exactly.
You know,
and wages, thinking what other things.
Well, you know, there could be marketing,
yes.
like all of those types of things that vary month to month. And we just, you know, for the most part, Scott, I guess it's a best guesstimate. Like we have to stay within, but we'll also talk about that as we go through, about what every time you're going to spend $1, what you need to think about.
Right. And one of the things too, Scott, is to think about, like, what we're talking about today is really what goes on financially per month. What you're really talking about is budgeting. So for example, you've got a $2,000 accounting bill that you have to pay this month. But really, what in your budget, you would have put together that in your annual budget and sort of allowed that you are going to acquire approximately $150 a month towards your accounting budget. So budgeting and income statements are two different things, but we really need to know what we're doing monthly to figure out where we're going to have our budget. And because this is going to come back up again at the end of towards the end of this presentation. So.
And one thing I do, Scott, always is I look at every quarter. So I have my monthly, but every quarter. So we may have a big buy. Let's say something comes up for sale, and our supplies in April are way up. But my mandate is by the end of the quarter, that has to come back down and balance itself, because sometimes that's going to happen. So you're going to have an ebb and flow. But if you take things over a 3-month period, and you can balance them out that way. Mm-hmm. So, and I found that works really well for us.
And Donna, what is the formula to figure the percentages? Are you talking about
each expense?
For each expense. So what you look at is you figure out what your total is, and then you take each individual amount and divide it, and that will give you your percentage.
So ideally, you know, what you want at the top with wages and with wages and supplies, you want to have about 75% of your income is what most companies, that's what they're sitting at. So you have 25 cents on every dollar to pay everything else. And
frightening.
It's frightening. And some people, like I've worked with people that it's been up to, like, they've been 88% for their supplies and their wages. So they have like 12% left. So that's why you have to know the top in order to budget for the bottom.
Right. So, you know, when we were looking at that income statement earlier, and it's $3,000 a month in sales. If your expenses, you know, are really going to come in at $4,000,
you're in trouble.
That's when you've got too much month at the end of your money, right?
But what we're doing today is we just really want to make you aware and keeping a much closer eye on what you're doing and understanding that you absolutely have to look at it. There's no point in burying your head in the sand. You absolutely must know where you're going.
And Scott's actually come up with a really good point, because things like rents, et cetera,
Absolutely.
they vary from place to place. Like we certainly know places where, you know, we have stylists and salons that we call them, where they're paying like $100 in rent, and others where they're paying thousands. But what the most important thing is, and why we are doing this, is because the prices that you charge for your services must take into consideration the expenses that you have every month.
Yes.
So you need to know your expenses before you can even figure out what your pricing is. It has to be reflective of what you're putting out. And if your rents in San Francisco are that much more, then your prices have to reflect that.
Absolutely. Because again, it makes no sense. If you're paying for supplies and wages, if you are paying any more than 75%, then you're going to be in trouble.
So remember,
you will be behind every
those are
month.
two things. Those are the two biggies, wages and supplies. Okay, so to keep those in the back of your mind, okay?
So, I mean, you know, for me, Scott, I try and keep my rent percentage always around 9 to 10%. And I've been able to do that. But if all of a sudden they put my rent up by, you know, $2,000 or $3,000, that's going to push my percentage up. So I have to adjust it somewhere else.
Right. And unfortunately, what's happened in our industry over the years is that we've all faced rent increases, and yet so say your rent goes up 10%, but you don't increase your prices by 10%.
Yeah.
So all of a sudden now, expenses are over the top, and we don't have enough. We're not bringing in enough money to meet those expenses.
Yeah. So
let's take a look at some of the expenses, Kath.
Yeah. So, I mean, let's talk about what constitutes an expense. So rent is probably the very first thing, because we have to have a space.
Yeah. And often it's one of the biggest ones there is, you know, after you pay your wages, right?
Yeah. And then supplies. And this is my big one. I think in our industry, if we want to go after savings, we need to really monitor our supplies. Because I have seen, I mean, I don't think you should be paying any more than, Aileen, 9 to 10% in supplies.
Yeah. You know, I think one of the most frustrating things for me is to be in the back room of a salon and see the wastage. You know, and unfortunately, I really sometimes feel that we're being held hostage by our distributors and manufacturers, because, for example, a 3-chair salon, you know, may be carrying like a line with 200 or 300 different color variations in there. They are not going to use all that color. And you know what, you guys, you know, you got to remember that your colorist, that your chemist, really, you can create any color as long as you've got your basic naturals and some toners. So really start thinking about what you've got going on in the different areas of your salon, and everything needs to be accounted for. If you're spending, you know, like again, going back to that $3,000 a month in sales, if you're spending more than $300 a month in supplies, something's wrong.
You need to really look at it closely for sure. Donna's having some trouble understanding the percentages. Scott, thank you very much for trying to help us with that. Again, Donna, if you want to send us an email after, I can probably help you out with that. So we're getting a little behind, so we got to keep moving forward. I know there's lots of questions, but it's just that we're trying to get you to have an overall understanding of what it is that you absolutely need to be looking at and how to do it. So again, expenses. you know, rent, supplies, wages. Wages are another thing. If you have staff, that's one of the other biggies that you have to keep a handle on.
Yes, because again, you know, like sort of historically in our, and it should be hysterically in our industry,
Yeah.
we've been paying like 50%. You know, basic on a commission rate. And unfortunately, it is no longer a viable business model for anybody who's got employees or whatever to manage that. So it's really something that you have to take a look at and maybe think about a new way of bringing wages, like hourly wages. But that's a whole other webinar.
That is a whole other webinar. But we just want you to be aware. We want you to look at what percentage of your sales each one of these things is. And then once you understand what the percentage of your sales that you're placing to each one of these, then and only then will you understand it and be able to make any changes. If possible, about expense percentages, what's ideal? For instance, at restaurants, they charge 3 times the food cost in general to cover costs of profit.
That's coming.
Yeah. And I really do think that we're about the same, actually.
Yep. So you, and you'll see that, I think that's 2 slides down, but
yeah.
Marketing.
Now, one thing that a lot of us do when we're looking at marketing, we cut a lot of our marketing back if we feel that we're not making enough money. Marketing is great, but marketing should be looked at as a return on investment.
You got it.
You need to understand the return on investment for marketing. So if I spend $500 on an ad for marketing, what should my return on investment be? Well, I would be always looking for 3 times.
Right.
So if I've spent $500, I would want to know that I generated $1,500 worth of business from that ad. Now, in saying that, there are some times that we do like a branding exercise. So for instance, with my hair loss business here in Victoria, we were brand new. Nobody knew us. We were opening a brand new business, and I needed to get people to understand, see the name. So what I did, we took an ad out on the back of a bus, and for the year. So knowing that I probably wasn't going to get the return on investment that I expected for that first year. But I will tell you that we are now starting to see the buildup of that return on investment.
I think one of the biggest problems with marketing is that it's sort of a nebulous area. What happens is business starts to fall off, and so we say, well, tell us a little bit about your marketing campaign. And they say, oh, don't have any money to do a marketing campaign. Well, if you're not doing a marketing campaign, how are you going to drive new business into your salon to create it?
Absolutely.
And then during the good times, we say, well, what's your marketing campaign? Oh, we don't need a marketing campaign we're so busy. But really, marketing is something that you need to be doing year round. And again, it's one of those budget figures. It's a variable expense, but it's a budget figure. So if you've got a marketing campaign that's going to cost you, $200 a month, that, or $2,400 a year, that you have to sort of have about $200 a month to account for that marketing budget.
Yeah.
But marketing must be done all year long.
Yeah. I have another question. Does 10% for supplies include non-professional?
No.
When we're not talking about office supplies or any of that, we're talking strictly about supplies
in the back
right now to be able to
your professional
to
supplies.
Generate. Yeah.
Yeah. So that would be anything in your back bar, from perms, color, or
your retail,
and your
but not office supplies or toilet paper or any of that.
And bank charges. Here's one that we get a lot of questions about, and something that people are really afraid of, particularly because of the cost of running credit cards in your bank through your business. They are a huge expense. But you know what? When it comes to customer service and customer experience, you have to be able to allow your clients to pay whatever way works best for them.
Absolutely.
Because that's part of the guest path experience.
Yeah.
So how do we overcome that? All right. So if your bank, and what we're finding, Kath, is usually around somewhere between 1% to 5%, isn't it?
Yeah, one.
Yeah.
I don't know if it was paying one, but
No.
two to five for sure.
Yeah. And so the thing is and what happens is the bigger your business, the more you're putting
Yep.
through credit cards, the lower your rates are. And usually the less that you're putting it, the higher it is. But if you've got rates of 5%, then you need to increase your prices to account for those charges rather than say, oh, I'm just not going to do it.
Yeah. And the other thing too is shop around.
Yes.
Shop around and get different, quotes, and because I think that there are companies out there that can help you to reduce some of those bank charges. And Scott just asked a really good question. Do you recommend creating incentives for paying cash check to reduce credit card processing costs? Well, I'll tell you my own experience, Scott, about that.
Yeah, because it's a good lesson.
Yeah, because we did try that. And we actually put signs up that actually came from our small business association in Canada, which I belong to. And they had signs made for people to put up encouraging clients to pay by debit or cash. I had such a backlash because of that. So it was, and of course with social media, it was on social media. And, they just lambasted us for even asking them to do that. So
because in today's marketplace, what's happening is everybody's out there using their credit card because they're collecting all these points, right? Which gets them other things. And the other thing, when you think about what the guest path experience, and Kath and I talk about that a lot, is how to create that perfect experience for your client. Well, allowing them to pay however it is that they want to pay is part of that. The big thing is that we have to account for the charges. It is part of your pricing.
Yeah. Yeah. And the big thing with that too is one of the things that we started that whole process for was because we have a big salon. We have a lot of staff and they get a lot of tips on credit cards.
Yeah.
And we're paying them out the tips. So when we did the numbers, it was significant. So that was one of the reasons that we started that. You just have to be really careful how you put that to your client base, because I will tell you the backlash that we got was just not worth it. So we have to hide it in other ways, like just if you put everything up $1, all your services up $1 to encourage to
account for it,
mm-hmm. Then that's what you do.
And actually, Charmel's come up with a great point here too, in case everybody hasn't seen that. PayPal has a merchant account that only charges about 2.7%, and the money's in your account immediately. And that is really great because, again, most of the companies hold their funds for 2 to 3 business days because they're out spending it while it's resting.
Yeah, for sure. So, and the other thing, Charmel, is, for a lot of these accounts, they say 2.75, but a lot of them actually have variables.
And they have hidden costs.
Because they can say that they are going to charge you 1.69%, but that 1.69% they are charging you is maybe on 2% of your transactions and everything else is more. Because the higher the point value for that card, the higher they charge you.
And then don't forget either, you've also got to pay for that point of sale piece of equipment. So, there's so many other things. But the number one key here, you guys, is get out there and shop around. Just because the bank says this is what they're going to charge you doesn't mean that that's what you have to settle for. Negotiate, negotiate, negotiate.
And Scott made a great point. He said the temptation is in our industry to determine costs compared to other salons, personal experience, etc. When the starting point for prices always should be
the costs. Exactly. Thank you. Software. With today's software, we're no longer just a downloading program or what's the word I want? Installing programs that run. It's an ever-changing download. Like, for example, Vagaro, which is a cloud-based system, and there's always going to be a monthly charge for that, and that is probably some of the most important dollars that you can spend.
Oh,
because
for sure.
not only does it cover that, it helps you with your accounting, it helps you with your marketing. It's such a broad base of what you can use with your software.
Absolutely. So.
And then next we've got, of course, insurance. And one of the most important things we want to make sure that you're doing insurance is make sure that you've got the proper amount of third-party liability.
Absolutely.
For
For
sure.
sure.
Scary, right?
Yeah.
Yeah.
I'm not going to touch wood. It's been a year since I've had anybody try and claim anything through our insurance from us, but it does happen, and you must have that insurance.
You do. So just check your insurance and make sure that it's that you've got it covered. And again, this will usually be an annual cost that you end up paying at once in the year. But in your budget, you are going to want to make sure that you have sort of divided it by 12 and assigned a monthly cost to it, so that you know you've got enough money for it.
So we've got a little bit of, I think, Natalie's asking Scott to explain that last comment that he made about the temptation to determine cost compared to other salons. Hysterically, when you open a salon or somebody is trying to gauge prices, what do? You look around at all the other salons in your area, and then that's how we base our prices.
Yeah. You think, oh, salon down the street is charging this, I guess I better charge that.
But what you really have to do is you have to add up all your costs. So your rent, because your rent could be quite different than the person down the street.
Exactly.
You may have like an absolutely beautiful salon where the place down the street needs to be updated.
Yeah.
You know, you may have other hidden costs. So you need to add up all of those costs. That's going to determine exactly what you need to be charging.
You know, maybe that might be a great webinar for next month, is to talk about how do we determine pricing in the salon.
Yeah, because
we could really get into it here and really figure it out. So let us mull over that and think about putting that on next month for you guys, okay? But let's carry on with these expenses, because
office expense, you know, that's just a given. You're going to have office expense. You're going to have paper. You're going to have all the things that you need to.
You've got to have your computers or your laptops or whatever it is that you're using. I mean, there's all sorts of other little things. You might need a stapler. It's an expense.
Yeah. So everything you use for office, you should be lumped under. The more we can break it down, and that's my big thing, is I like to break things down, because the more we can break things down, the easier it is for us to see where we're overspending.
Yes.
And then we're able to actually make a difference, affect some change.
Sorry, Tashira, I'm busy tomorrow.
So, and then phone. We all need to have phone. So
yes, you can't do our business without phone. Heck, I can't do my life without a phone.
Yeah. So we have to, you know, incorporate that in.
Yeah.
Utilities. If you have a space, then you're going to have to pay utilities. That's one of the things that keeps going up and up and up. So again, we have to look at that. Travel for education travel, that needs to go in there.
And, you know, and actually let's sort of lump those together, travel and education, because we were talking earlier about investment.
Yeah.
And the return on investment. The return on your investment in education is so big.
Yeah, it's very important. You know, like you can't get out of school and figure, there, I'm done.
No.
Our business is constantly evolving. You constantly need to upgrade your education and tell all your clients that you're doing it.
Right. Exactly. Brag about it. And the other thing is please do not negate the importance of doing business education. And we're so thrilled that you guys are on this webinar with us today, because this is business education. Take the hour that you are spending with us and put a dollar value to it and use it, because I tell you, this is invaluable. This will give you a great return on your investment of time.
Yeah, so we're just breaking down, you know, a lot of these expenses so you can kind of get a feel and understand. So what we're trying to do is we're trying to get you to think profit. because you can't have profit unless you completely understand your numbers. If you make profit without understanding your numbers, you're lucky.
Right.
You know, that's just pure unadulterated luck, because
Okay.
most of us won't.
Exactly. Okay, so here's what we mean by this. We've talked all about the expenses. So what I want you to do this week is sit down and probably the best place to find all your expenses is even in your bank statement. See what you're paying out. Go through and track all your numbers. Add them up and see what it's costing you to run your business. And I don't care whether you've got 100 employees or whether you're a single chair operator, the same rules apply. Add up all of your expenses.
Mm-hmm.
Now, let's determine how much profit you want to make.
Yes, well, that's the big, aha.
Aha.
How much do I want to have after everything is paid?
Right. So if we add that profit into your expenses, then you know how much you got to cover and bring in your income.
So what we're saying is, if you're doing $3,000 or let's say $5,000 a month, that's what you want to bring in, and that's going to cover your expenses and pay yourself. If you want to have 10% profit, then that's an extra $500.
Right.
So, and you can put the profit back into your business, or you can put it in an account and take it out at the end of the year.
Right. But just remember that if you budget profit into your expenses, then you are going to be thinking of that number when you're bringing in your income.
Yeah, because guess what? We are not a non-profit business.
How many of you are running a hobby out there?
We are a for-profit business. Whether you're one person or 50 people, you are a for-profit business.
Oh, and look at what Scott says.
All the
taxes and regulation. I tracked 5 different taxes, cosmetology renewal. Oh my goodness. Yeah, I know sometimes it seems endless, Scott. And again, but all of those things need to be taken into consideration when you are doing your pricing.
So again, an income statement. We just want to give you an idea of an income statement. And that was really just for a visual.
And this is probably the most important thing you can do for yourself every single month. Now, like Catherine said, we like to track numbers daily. You want to know exactly what you brought in every single day and just kind of have a number running through your head. I find sometimes that mental assignment keeps you focused on what you need, because it also tells you, and actually let's mention the calendar formula, because the calendar formula has got to be the easiest thing in the world to do, and yet it's a driving force.
Yeah, and I mean, I'm sure if you've been on our webinars before, you've heard me talk about the calendar principle, and that's how I grew my business. Is basically I took a regular calendar and I broke down from, what I needed to make every single day, plus built in some profit. I broke it down to a daily total. That was on my calendar. Every single day that we broke or, were above that, I would take a highlighter and I would highlight it. Initially, there wasn't a lot of check marks on there because we set the bar pretty high. But as we went along, that I saw more and more highlighted squares, highlighted days. And that really kept me on task and understanding of what I needed to do. It's a simple way to drive that home to yourself. When I stepped out of my business on a daily basis in my large salon in Winnipeg, I have 4 shareholders or 4 co-owners. And to teach them that they needed to look at the numbers every day, I would randomly phone and ask them, where are we for the month? What did we do yesterday? What did we do the year before on this day? Because it has to be top of mind. It has to be top of mind in order to drive your business.
And here's the funny thing. It's when you know your numbers like that, it's not that you're out there hounding people to, we need another $100 in the till today. That's not really what happens, but it's almost like a subliminal message.
Yeah.
When you know that you've got to hit, $2,000 in a day in sales, you just, I don't know. It's just kind of like a subliminal thing that you think, it just moves you. You remember to do the add-on sale. You remember to offer the retail. You remember to do the rebooking. It's just, it's like an unconscious movement forward.
Yeah, and that's really what you're trying to drive. You're trying to drive this to be a habit.
Yes, exactly.
It takes 21 days to create a habit. So it's going to take you. And that's why having something, we're visual people, and having something visual is really great.
And that's why this is really great, because this is a visual. So at the end of April, I want you to sit down and write down your revenue, collect it, and figure out your service revenue and your retail revenue, and add it up for the month and put it in a column so you know what your total revenues are. And then,
because here's the thing, and this is a big thing. If you are not on top of your numbers every day, and you get to the end of the month and you see that, what you needed was $5,000 for the month, and what you're at is $4,000, you have $1,000 gap.
Yeah. Where's it going to come from?
But what can you do about it at that point? There is nothing you can do about it, because that's history.
Yeah.
And what we need, that's why we need to be aware, so that halfway through the month, we know, oh, we're lagging behind. We need to pick it up.
You got it. And again, knowing your numbers, it's just this driver. Like I always say, you don't own the money in your account until you've collected everything that you need.
Absolutely. So a quick rule of thumb is, so let's take your rent plus any debt that you have. So let's say your rent is $1,000 and you have a debt repayment of $200.
And let's say that debt is, like say you installed some new equipment, like a roller ball or something like that. And so you've got to pay that back. So you're going to add that in.
So 1,000 plus 200 is 1,200. If you take times 7, that's $8,400. And that's basically to break even.
That's just a break-even point. So that's what we look at as a rule of thumb break-even point for our business.
It's a quick way in your head to kind of go, okay, so this is what my rent is. And that's just a multiplying factor that we've used for the last 10 years. It kind of takes everything into consideration, and it kind of gives you an idea of what it is that you need
to break even. This is before profit. This is just to break even.
This is something that we use in the consulting company that I worked for. It's something that we use to give a quick synopsis of where we were.
Yeah. And yes, and this is per month. And the 7 is sort of an industry standard, you might say. We didn't just pluck it out of the air. This was determined by accountants, etc., working in our industry to determine that as a general rule of thumb, you add rent and debt, multiply it by 7, and this will give you a break-even figure.
This is just a quick rule of thumb so that like Scott, you said your rent is really outrageous,
exorbitant.
So you need rent plus debt. So that's kind of where you need to be, and that helps you with your cost breakdown.
For sure.
So that's what, so pricing, this is what I need to keep in my mind for pricing.
And Avia, when we say industry standard, of course, we mean the beauty industry. That's us. We're the beauty industry.
So let's talk a little bit about chair or booth renters. I mean, on average, we're talking average here, it costs the average chair renter 45% of the income they bring in to cover their expenses. Yeah. And so a renter bringing in $8,400 per month is actually making approximately $4,620 per month, or $55,440 per year.
let me just clarify this quickly too, because this last slide, we're really talking about this, a salon as a business who have employees and they're paying commission and wages, right? And this slide, we're really talking about the individuals, because we're seeing two real different business models in the business. And it is different being a chair and booth renter than it is being a salon owner.
Absolutely. So it all depends on what you want to bring in a month. You know, are you happy making $55,000 a year? If not, then you know what you need to do to go above and beyond that.
Exactly. And that's
kind of the quick rule of thumb for chair and booth renters.
You got it.
So now, here's an interesting tidbit.
This is a great one, because this makes it really easy. And there's something that Scott touched on earlier too.
So for every $1,000 that you can save in expenses, it's $3,000 less in income needed. So it's a ×3 multiplier.
Right. Now we're talking about the expense portion of your income and your profit and loss statement, right? So again, when you're looking at all those expenses that we've added up, as a general rule of thumb, for every $1 spent on expenses, you need to generate $3 in revenues.
So it's a really good way to know, do I really need that, you know, really expensive station? You know, the station is gonna, and the chair is gonna cost me $4,000 and blah, blah. It's just a good way to gauge
your expenditures.
And it's like, okay, so do I think that I can generate this much from that expense?
Yeah, to make it justified, right? Oh, I lost my train of thought.
Oh, there it was gone.
Gone, baby, gone. Yeah.
So quick rule of thumb. And we had, actually, it was really interesting. I was working at a conference, and we had a young lady there, 2 salon owners, partners in this salon. And they were very high fashion, very high end. And they each wanted a Gucci purse and a Gucci briefcase. And I don't know how much it was. It was it was a very high amount of money. And I remember the man that was giving the presentation, the man that I worked with, he looked at them and he said, well, that briefcase is going to cost you $9,000. You have to work your butt off to make $9,000 more so you can have a briefcase from Gucci.
So there you go. And, you know, when we're going back to, you know, one of, you know, the biggest wasters I see in the business, of course, is in the back bar. So this is where you really think for every $1,000 you can save in expenses in the back bar, you need $3,000 less in revenues produced. So really, you know, sharpen up that back bar of yours and really take a look at your expenses. We tend to throw color away like crazy.
Yes, we do.
Wasteful. We do. Let's start looking for savings.
So savings, where can you save?
Perfect segue, don't you think?
Yeah. Where can you save? Supplies.
Well, there you go.
Absolutely. Number one place to start looking at what you're using.
Right.
And what you're throwing away.
Exactly. And there's all sorts of alternatives out there now for recyclable materials or whatever, you know, rather than using, I can't even think of one right now, but really check it out. Really pay attention to the new innovative products that are coming out in the marketplace, because they can be really, really helpful.
Yeah. And if you're having cash flow problems, I can't tell you how many times I went into salons and, you know, they're struggling, they're having cash flow problems. I'd take one look at their professional back bar or one look at their retail shelf, and I would say, come visit your money.
Yeah,
because this is where your money is. This is where your cash flow is. It's tied up on your shelf. If you're not moving things, then, you know, put a sale on, blow them out. And because it's no good sitting on your shelf
if it's not selling. And how often do we see retail products that are a year old and haven't sold and they're still sitting on the shelf? Well, that every time you see that bottle of shampoo, it's costing you money having it sitting there. This is a huge place to save money.
Yeah. And Scott, you say buy in bulk when storage allows. I would agree with that to a point,
to a certain extent,
because I have seen salon owners that, oh my God, it looks like a beauty supply store.
Mm-hmm.
I would say for your best sellers, buy in bulk. If you can do it, you know that they're going to move. But for everything else, I mean, there's what, 10, 15 products sitting on our shelves that we might move on a move a lot of on a regular basis.
And the whole line consists of 100 products that you've got, or 100 different SKUs that you've got sitting on your shelf.
I can't tell you how much money is tied up in that.
Yeah, it's really scary, and we really have to take a look at it, right? So be really cautious. Buy in bulk if the product is worth it.
Absolutely.
If you're turning it, right?
Yeah. And I mean, supplies like toilet paper and all of that kind of stuff. Yes, you can go to Costco and buy that. But, you know, just the other day in my own company, we're going through computer paper like it's going out of style. And I noticed that the girls were printing out like a full page receipt for every single transaction. And that would be if somebody walked in to, you know, buy a product, they didn't want the receipt. They're just going to throw it away.
Yeah.
You know, and I'm going like, hello, like that's a waste. Stop. So we need to look at all these different things.
And, you know, I know that, you know, buying toiletries and paper towels and everything else in bulk can save you money. But if you have to pay for a storage room to collect all that stuff, and believe me, we have seen that. We have a very wonderful friend who has to pay, I think it's $100 a month storage to collect all her paper towel and toilet paper and all the extra things. And so you have to think, is it really worth it? Right?
Yeah.
So
not so much.
Not so much.
So you can definitely find big savings right there. If you're paying wages or commissions, that you need to really watch it. You know, just make sure that you're not going over. Like, I really don't like to pay any more than 58% out in wages and commission.
In total.
That's with my taxes and payroll taxes and everything in there.
And holidays, et cetera, et
cetera. And in Canada, we are obliged to pay big time vacation pay, stat holiday pay, all of that.
There's pension, there's government pensions. So, you know, like a 50% commission rate here in Canada really ends up being, I think it's 63%.
Yeah.
So, you know, you have to really think twice about, you know, be very aware of really what it is that you're putting out.
Yeah. And then again, we talked about credit card fees. That's just, you know,
negotiate.
You can do all of those things. But if you don't know your numbers, you can't even start to do this stuff.
Yeah. So true. So true. And Scott, retail gathering dust represents opportunity cost. You got it. You got it, baby. Really think about it. Okay. Really figure out what are your best sellers. Stock them up, get them moving. But if it's not selling,
put it on sale.
Get
it out the door.
You don't need it. And do not allow yourself to be held hostage by your distributor or your manufacturer.
Here, here.
Here, here.
And you can say that because you were a distributor for many years.
You bet.
Alrighty. And we touched on expenses as an investment. What's an investment? What's an expense?
Well, you know, I mean, it often looks like an investment and an expense. We talked about it, for example, education. It's an expense, but it's also an investment. It's an investment in yourself. We talked about software. Software is an expense, but it's also an investment. It's an investment in improving your business. All of these things. And you have to think that you're going to get a return on that money that you're spending. It isn't just, oh gosh, I have to pay this or that or whatever, because you're going to get money back on that investment.
Yeah. And honestly, I will tell you, and I'll tell you my story. Some of you may have heard it, but many years ago, I bought a second location and I made a bad business decision. I was bleeding money from that second location. My location that I still have was funding that second location. And I was getting deeper in the hole every month. And I found a great consultant that I thought, I need to understand how I'm going to get out of this. And It was a huge amount of money.
But
monthly money.
Talk about an investment.
It was a total investment, because I will tell you that helped me turn my business around. 20 years later, we're still here. We've grown to 6,400 square feet. We make profit most of the time. Some months we just break even. But without that, we would have gone bankrupt. In fact, they thought we were going to go bankrupt. They didn't think they could save us. We worked hard and they saved us.
You got it.
You know, so 20 years later.
Was that investment worth it? Every single penny.
And I can't tell you, we have people contact us all the time and they can't afford $100 for a half-hour call.
And we just think, well, okay, you have to invest in yourselves and your business, because the return on that is exponential.
Yeah.
Because here Catherine sits on the west coast of Canada looking at our incredible weather because of the investment she made in herself and her company all those years ago. And
so by spending an hour with us this morning, I hope you feel that that was an investment in yourself.
And in your time.
Because time is money. All of our time is money.
You got it. And so please take this information and use it, and really take a look at what it is that you're doing with your numbers. Okay. We want to hear next month that we've made a difference and that you've made a difference in your business life.
And if you don't understand it, invest in a bookkeeper.
You got it.
Invest in someone to help you.
Yeah.
Someone who is close by. You need to invest in yourself.
Right. We don't cut our own hair, and accountants don't cut their hair. They come to you to get it. If we don't do our books, we go to see someone else, right?
Yeah, absolutely. It's well worth it to me because that's not my forte. So I
think, Charmel, you're wonderful.
I hope that this has opened your eyes a little bit about your numbers. And I know for myself that, you know, I buried my head in the sand for a little bit and it got me nowhere. So what we really want to do is just get your head out of the sand and help to make you successful.
And profitable. And speaking of profitable, we are the Profitable Salon Owner, and you can find us on our website at www.theprofitablesalonowner.com. We do put out a free, no-charge newsletter every Monday morning, and if you go onto our website, you can sign up for it on the right-hand side, and we'll see you next Monday.
Yeah.
And you can always send us a note at info@theprofitablesalonowner.com. And of course, Catherine and I would very much like to thank Vagaro for having us.
And Ira and Donna, if you would like to send us an email after, if you need any more explanation, you can definitely do that and we can help you out. Looking for ideas to bring up my retail suggestions? Talk about it.
Yeah.
Talk about it. Talk about it. Talk about it. Remember what I don't know if you were on the webinar last time, but the what, why, and the benefit. What, why, and benefit.
And these webinars are on the Vagaro site, so you can always go back into last month and check it out, okay? All right. Listen, everybody, we got to fly. We look forward to seeing you next month. We'll talk about maybe doing something on pricing.
Yeah.
Okay? Take care, everybody. Bye-bye.
Tashara, please send me an email with your email address, and we will
take care of that.
We'll take care of that.
Yeah.
Okay.
Take care, everybody. Bye-bye.